What's going on, guys, and welcome back to another video. So I want to address the stock market crash, and specifically the one question that a lot of people have is, how do you trade in a down market? What can you do? Because over the past couple of weeks, I have probably received dozens of emails, hundreds and hundreds of comments just here on the channel about the stock market. People want to know, how do you trade in a market like this? What do you do? Everybody's asking, when should I buy? What should I buy? And some people want to know, is buying right now pretty much just throwing your money into the fire and burning it? Absolutely not. The truth is that right now, okay, what you need to understand is in a market like this, there's a few different things that you can do. The first thing, and this is something that I do as well, this is something I do probably every other day. It's not something I'm doing every day, is you can day trade. And you can day trade stocks that have high volatility throughout the day. You see the numbers just completely shoot up. They drop back down, or vice versa. And this is a great way to make some money. However, it's not for everybody, and in order to day trade, you really need to have an account that's over $25,000 in order to be out of the day trading minimum, all right? So just understand, and I completely understand this, some people don't fall within this category, and that's fine. Here's something I do every single day, and I love it. I swing trade stocks. And here's what this means. I am looking for a stock, and I do this all the time, every single day. I'm trying to find a company that has received bad news that, in my opinion, is a little bit blown out of proportion. For example, just a few days ago, actually on I think the 11th, I ended up buying 1,000 shares of Bed Bath & Beyond at $13.25. Okay, let me see if I can pull up a chart really quick. But I ended up buying Bed Bath & Beyond for $13.25. I bought 1,000 shares. Let me show you this really quick. Okay, here's Bed Bath & Beyond. Now I ended up buying it. It was at $13.25. It was on the 11th, so probably somewhere around here. Right, it's probably somewhere around here. Once I started to see that it was heading back up. Now I bought 1,000 shares. Here's the reason why. If you look at this, okay, let's go back a month. It hit $13, right? It went below that really. But what you need to understand is it's a fairly good stock. Look at this, okay? And it has runs. Well, that's year to date. Let's go back whole year. And it has these runs, right? So in my opinion, is this a $15 stock? No, it's probably a little bit more than that, right? But here's the reason why I bought it. Let's go back 5 days. So I ended up picking up probably somewhere around here when it was heading back up, and I saw a confirmation that it was going back up. But the reason why it was hit so hard was because of it had poor earnings. It was a huge earnings miss. So for me, I thought, you know what? This is a great time to buy. I'm going to buy in. Now, I didn't get it as the lowest. I waited for confirmation that was coming back, and I bought. So today, I ended up selling. I actually ended up selling at $15.85. But look at this. It ran up to over $16. I didn't sell at $16. I waited for it to run up. Then I saw it turned around a little bit, and then it bounced. It bounced off $15.90. Now these charts aren't 100% accurate. Okay, I believe it bounced off a little bit closer to $16. Then it started dropping back down, and so I had a sell order at $15.85, and I sold. So in 2 days, I made about $2,600 before taxes, but in just 2 days. That's the reason why I swing trade stocks, is because I think it's a great move. This is something that anybody can do. But just understand, look at this, okay? Today, look at the Dow Jones. Dow Jones is down. S&P's down. NASDAQ down. Russell's down. In the morning, things were looking up. Things were looking good, but that's not how it turned out. That's not what happened in the end. So I wanted to show you that because that's what I do, and that's what I personally love doing, is I swing trade stocks. Now, the other thing you can do, and this is something I love doing as well, and I take my profits from day trading and from swing trades, and I push that money into long-term holds. Okay, so that's my next step. And remember, Just look at this, okay? Let me show you something really quick. Let's say if I were to buy Microsoft, okay? Let's say you bought Microsoft, which I did, okay? I bought Microsoft. People thought I was dumb. It was a dumb move, but I did it. Let me show you this really quick. Here's Microsoft. Now, if you would have bought Microsoft, back in 2017 at 62 bucks, you're looking like a genius because now it's over $300. Awesome. But I didn't do, now I did, but what I want to show you is I actually bought Microsoft at $150. Now here's the reason why. It was trading in February, up over 180 bucks. Great. But then I saw it started dropping. Now it came all the way down to $137 March 20th. This is when we saw every stock just completely collapse. But I thought, you know what? Microsoft is a good company. It's a company that I'd like to hold on to long term in my home state of Washington, right? So I thought, I want this. I want this company. Same thing with Amazon, right? These are companies that I buy and hold long term. So I bought at $150. And I don't remember how many shares I bought, but I know I placed an order at $150. That was it. Now, this could have continued to drop. It could have easily dropped and kept going, but it didn't. It started to rebound and went back up. So when people were telling me that I was dumb, this is not a smart move because it could completely fall. It could have. And I would have been fine if it fell back down to $100. Even though I paid $150 for it, I would have been fine because I knew that eventually it's gonna go back up. So it's now at $304. Look at this. Well, we'll just go back a month, okay? A month ago, $340, right? That's where it was sitting. That was great. And now it's at $300. You're probably thinking, oh no, I should sell. I'm gonna lose money. Just understand, it will go back up. It always does. They always do. So don't overreact and understand. This is part of the process. It goes up and it goes back down. Now, the other thing you need to understand is that there's another option. You could actually do options trading and you could actually buy puts. And when you buy puts, you will make money as the stock continues to drop. But you also do have to pay a premium upfront for this. Just understand. Now, I'm not going to get into this because there's a little bit more risk behind this in options trading and specifically puts, because if all of a sudden the stock rebounds, well, you're going to be in it for a good amount of money. So I'm not going to elaborate on this, but just understand options trading is another way to trade in a down market. Now, this isn't financial advice, but I want to explain what normally happens in the stock market. Okay, because stocks do go up and down. They do this all the time. Okay, and I want to pull up another chart. I want to pull up another chart for you because I want to explain Google. Okay, let me show you the Google stock and the reason why I want to show you this. Okay, let's say you bought one share of Google. Let me pull up the chart. So let's say you bought one share of Google. Okay, here it is. Let's say you bought Google 5 years ago, and you bought it at $820, $828, right? We'll use $820 because that's easier to remember. And let's say it ran up to what, $1,500, I think? Yeah, $1,500 in February of 2020. Then it dropped down to $1,000. Many people sold. Many people were selling. Now, not me. I ended up buying. Okay, I think I only bought like 5 shares. It wasn't a lot. I didn't have a whole lot of money or disposable income at that time to put towards Google or Alphabet at this point. But let's say you sold, you would have made about $200. That's still something. But what if you had one share and you kept it? Today, it's worth $2,700. $2,700. So what you invested, your $800 investment, you would have made 234%. You'd be up about $1,900 on one share in just 5 years. That's the reason why I take my day trading profits, I take my swing trading profits, and I put it into long-term holds, because over the long term, 2 years, 5 years, 10 years, 50 years, my money is going to completely grow, right? It's going to compound. And it doesn't matter to me, at least. It doesn't matter if I lose a little bit of money short term. My goal has always been to acquire as many shares as humanly possible and keep acquiring more shares throughout the years. So every time we see a dip for whatever reason, and this is why you always hear people say buy the dip, is because when it dips, the chances of it continuing to dip are very small. But eventually it will rebound and it will come back up in most cases. So just understand, how do you trade in a down market? Well, you can't buy something as it's going up and then be like, oh no, it's coming back down, and so you sell. You always lose money. You wait for it to drop, then you buy, and then you sell as it goes up. That's the way you should do it. So if you have any questions on any of this stuff, please ask in the comment section below. But just understand, a stock market crash is not the end of the world. Because if you have money sitting on the sideline and you can put it in when the market's at its lowest and wait until it rides up, you will be very happy with that decision. So if you have any questions whatsoever, please ask your questions down in the comment section below. Just want to thank you guys for watching. Have a wonderful rest of your day. Consider subscribing, and I'll see you guys on the next one.